Okay, we've got a Nikola fraud update. The electric car maker is expecting a $125 million fine, and Trevor Milton, their former disgraced CEO, is scheduled to start his trial in April. Their market cap has crashed massively from $34 billion to now under $5 billion. To catch you up on what's happened since he was on the podcast, Milton was indicted on 3 counts of fraud in July by the Department of Justice. Each count carries a maximum jail sentence of between 20 and 25 years. According to Reuters, that's a total of up to 75 years in prison if they were served sequentially. I'm not sure about the law if those would be served concurrently or sequentially. But let's just break down the crazy year and a half that Nikola had to refresh everybody in the audience. They SPAC'd on June 3rd, and they started trading as NKLA. You can search for NKLA in Google and get their stock history or in your iPhone app. And if you look at that history, it is dismal. Here's a chart for those of you watching the YouTube video at youtube.com/thisweekin. And it has been a massive fall from grace. In late June, Nikola peaked at $34 billion as a market cap. They were trading at about $70 a share. Now they're trading at $11 a share, and they're worth $4.5 billion approximately. I think with no product and no revenue, this is a $450 million company. Maximum. I don't know what their cash position is, but I would give them like $1 million above their cash position because they're going to be embattled in lawsuits. They might even be better off just giving everybody their cash back right now. So they're worth $4.5 billion right now. The cash position's around $500 million. I would give them a valuation of $1 million above their $500 million cash position because they're going to burn through $100 million on legal fees, no doubt. It's going to be a complete disaster. This company will probably be a zero, be taken private, and or just be delisted. That's my best prediction. And I'm pretty good at these things. So we had Trevor Milton on episode 1090 back in July of 2020. You all remember that episode. If you haven't seen it, it is, if I dare say, a virtuoso performance by me as an interviewer, because I kind of got the sense that this kid was full of shit and I just let him talk. And some people are like, you're being too easy on him. I made a strategic decision that me confronting him would not be as effective as letting him talk, because the more he talked, the wilder it got. And it got pretty wild. I had heard somebody as an interviewer say, a famous interviewer at some point said, just ask a very basic question and let the person talk is probably the best interview technique. That always stuck with me. At the time, Nikola was trading at $30 a share. They had about a $13 billion market cap. Milton, if you remember, was ousted in September of 2020 after activist short seller Hindenburg Research, they name these things wonderfully, published a report alleging that Nikola's contracts and progress were greatly exaggerated. And it turns out that was true. We covered this on episode 1112 in September of 2020 after the Hindenburg report was released. Now, in July of 2020, Milton was indicted by a federal grand jury on 3 counts of fraud. You can see episode 1256 for that one. Quote from a U.S. attorney that worked on the case via the Department of Justice press release, and I'm quoting here. As alleged, Trevor Milton brazenly and repeatedly used social media and appearances and interviews on television, podcasts, and in print to make false and misleading claims about the status of Nikola's trucks and technology. They definitely watched our podcast. The one time I'll take a shout out from the Department of Justice and be really thrilled about it. They definitely watch our podcast. And again, Trevor Milton's trial is scheduled to start on April 4th, 2022 in New York. Please let that one be televised. I guess if it's a federal one, my understanding is federal trials are not televised, and then it's up to the local jurisdictions if they will be televised. That's why Theranos is not televised. According to a FreightWaves article, Milton requested the trial be moved from New York to Arizona. A federal judge denied this request because Milton bought and sold shares on the New York-based NASDAQ. Makes sense. His defense, as per the FreightWaves.com article, quote, Milton claimed he should not have been charged in New York for securities fraud and wire fraud because his alleged illegal behavior occurred in Arizona, where Nikola is headquartered, or Utah, where he lives. I guess he wanted the home court advantage, and he is not going to get it. On July 29th, Milton surrendered to authorities, pled not guilty to the charges, and was freed on $100 million in bail. Quite a bail payment. Interestingly, he used 2 properties in Utah as collateral for bail. According to CNBC, he bought a 2,000-acre riverside estate in Utah for $32.5 million in November of 2019. Pretty good-looking house. I might put a bid in on this when it goes to when this goes to auction. I could put 20 million on that one, and I could have all the Noti gang come over, and we'll have a big party for This Week in Startups at that 2,000 acre estate. That's pretty good. This was after he sold secondary shares during a $250 million raise that valued Nikola at $3.2 billion in September of 2019. So you can check out Milton's estate. According to the LA Times, it's the most expensive residential purchase in Utah history, which is surprising because I think $32 million is the average apartment in Manhattan right now, and the average starter home in LA. He's also facing civil securities fraud charges from the SEC. Milton sold another $70 million worth of stock in the PIPE. That's the private investment in a public entity. When you do a SPAC, you can also put together a PIPE, letting private investors invest in that public entity. And I asked him about this on episode 1090. You can check out his answer in this 2-minute and 30-second clip from our interview. I'll play the whole thing so you can hear it. The SPAC puts the money in. You have a PIPE, a private investment in a public entity that occurs at the same time. But then you sell $70 million in shares at that same time. Is that correct?
Yep. Yeah.
So how do you, I mean, that's something people were really critical of. Like, why, if you're so long the vision, would you take $70 million off the table before the product's even launched? That was a red flag of red flags for me and for others.
Yeah, there's a lot of people who have asked me and criticized me. And here's the real answer to it. When we were going through this, the PIPE put in all their money at $10, at the $10 share price, essentially, which is the pre-IPO price for everybody. The SPAC put in the thing at $10 as well. And the PIPE, these big funds like Fidelity, PSAM, all these different groups that are in here, BlackRock, all these other groups, they came in, they said, look, you got too much control, way too much. You own the board, what
was your ownership at that point, percentage-wise, ballpark?
Well, I gave up a lot. So I had 70% of the company, and I gave about 30 to my employees. I wanted them to all become rich. And so I wanted them all become, I don't want all the money myself. I want to share it with people so
you created a 30% employee stock option pool
well, I gave away probably about 15% directly, and then the other 15% through the option. So it was over 30% of my stock was diluted. It was taken off 30% of the top to those guys. And I still had 40% of the company.
Yeah.
And I'll make, hundreds of people wealthy in their generations to come after it. And that's what I like in life. But the answer to why the stock was sold is they came to me and they said, look, we don't want you to be the CEO and the executive chairman. You got to choose one or the other. And I asked them why. I said, what's your reason? And they said, well, it's not healthy to have one voice everywhere to control everything. And I said, I can see that. That's actually some wisdom in that. And they said, we want you to be locked up longer. We want you to be here for a long period of time. We want you to take $1 salary, and also the whole executive team. This is what no one ever reported on. All they did is report on the bad, right? Because it gets headlines. So the entire executive team came in and said, okay, we're going to take $1 salary. And we get stock bonuses. That's it. And they said, Trevor, we want you to reduce down some of that control. And they said, we'll buy some of those shares from you so you can live on this. So you're not focused on money during the time that you are running this company. We want you to have some money out now. It's smart. And we want you to focus on Nikola, not focus on how you're going to pay your bills or pay for your house or whatever else.
All right. I'm getting a lot of Grant Cardone vibes from that guy, or like Billy McFarland. There's great polls from my Noti chat room now telling me who does that guy remind you of when he talks? My God, it seems like he is, he just seems like he is working you in the interview. All around the world, tech companies are innovating and driving returns for investors. Don't I know it? Well, our crowd analyzes many of these companies, and they search across the global private market. Then they select the ones with the greatest growth potential. And finally, they bring them to us, me and you. From personalized medicine to cybersecurity to robotics and quantum computing and much more, whether it's in a state-of-the-art lab, a startup garage, or anywhere in between, our crowd identifies innovators so you can invest when growth potential is greatest, which is early. Our crowd accredited investors have already invested over $1 billion in growing tech companies, and many of their members have benefited from 46 IPOs or exits. Now you can truly diversify your portfolio by investing early in innovative private market companies at Our Crowd. Join the fastest growing venture capital investment community at ourcrowd.com/twist. That's ourcrowd, OURCROWD.com/twist to sign up for free today.